So hello and happy Saturday, active traders. I hope that y'all are having a peaceful weekend. Remember, we've got a holiday weekend. The markets are closed on Monday for President's Day. And happy Valentine's Day to all of you, right? It's a sweetheart of a market, right? With the market racing to new highs. Let's make sense of this and see what's worth trading. The ins and the outs, how to shake it all about, and how to stay on top of things in our current market environment moving forward into our next week ahead. So it's a 4-day week, so we got a decreased number of days, right? We're a 4-day week. Market's taking out new highs. And one of the things I want you to pay attention to, as always, is the VIX. VIX is way down at 20. And for those of you who trade UVXY, it was way down at 937 on Friday, yesterday into the close. So we're at support. The main point is the market's going up and there's no end in sight, right? But on the flip side, from the bear cave, the VIX is at support right near 20. Institutional traders, any professional trader worth their salt knows to look at the VIX range here between 20 and 26 or so. We're at support at the 20 mark in the VIX. So we may well find a pivot to the upside in the VIX and a pullback in the market next week. As Kramer had said, the market's getting frothy, and I agree. So we may want to take a look at things with all these breakout charts we've got going on. We take a look at the broad market. We start off by looking at our S&P. You can see key resistance is right up there at 3950 and supports at 3900. We're just within that region, just around 3890 or so. So we got to pivot off the 50 SMA here. Main thing is pay attention to the height of the candles starting Tuesday in terms of the range. Do we have expanding range or contracting range in the market? Trading successfully in this market is all about trading ranges and volatility correctly with wide range charts that have high volatility. And you do that in context of the broad market. So when we have these flat, choppy days, like you can see we had here back on Tuesday and the Friday before, those are not as tradable, right? So pay attention to whether or not, the main takeaway is pay attention to Monday and Tuesday relative ranges of the candles. Are they increasing in range, which is good, or are they going to stay the same or get flatter or smaller trading ranges? And be more aggressive. At least I'm going to be more aggressive in my own trades if we have wider than average trading ranges. Oh, you can see last week, Monday and Friday had the biggest range days of the week, right? You can barely see that on the candles, but there's that candle's Monday and that's Friday, which is unusual, right? But they're all still relatively narrow range days. What we're going to look for is relative strength in our sectors. For example, with the semiconductor chip shortage, our Philly Sox sector is really lighting it up, and so is our biotech sector. Those are sector charts. If you take a look at the difference between different industry groups and sectors and commodities like oil and gold and silver, especially lately, has been on fire. You want to take a look at where the money's going to next. One good example of this is Zillow, right? It's kind of like the Amazon of housing, right? With the people moving out of big cities and into the suburbs, housing prices are going up. Like here in Colorado Springs, my house price is, the value of my house is skyrocketing, which is good. Anyway, you want to stay on top of current industry trends. So things like housing and cannabis are two current, and electric vehicles and energy and silver are hot sectors right now. So those are 5 to pay attention to. You got your housing, cannabis on a pivot. It got sold down, they'll likely bounce. Probably not early next week, maybe toward the tail end of next week. I'm looking for bounces in cannabis stocks. Look at those in a minute. Silver and energy and EV plays. Bitcoin too, right? Riot's been having a riot of a time. Look at that chart, RIOT. One of my traders, Wendy, had mentioned this one, and Mara, M-A-R-A, is the other blockchain or Bitcoin play. You can see this guy's gone from $6 a share to $50 a share. Much of that this past week, right? Skyrocketing up since Monday from 26 to 50. So it doubled last week. How many of you are trading this one? Riot's really good, right? What a riot, what a chart, what a market. So you want to pay attention to emerging trends. I've never seen trend volatility be as strong as it has been this past several weeks in hot sectors, right? Housing, Bitcoin, cannabis, and others are all hot plays to pay careful attention to this week ahead. So one of the things we do in the live room is go over those charts for both day and swing trades. You know, at Trading Open, we like to cover, I'm doing a lot more, spending a lot more time on great swing trading setups for those of you who do swing trades, in addition to the daily gappers and runners for those of you like hit and run day trading or open range breakout day trades. So if you're a swing trader, be sure to join the room. If you're a day trader, be especially sure to join the room. And thanks to all of you who are members. Anyway, let's take a look at some charts here. What's going on with our pot stocks? What goes up goes down, right? Wednesday was a big day to the upside, and then it crashed and burned, and Thursday sold off too. Anyway, that's Tilray. I bought at 8 and sold at, I think it was 68. I've got a screen cap somewhere. Anyway, when you look for these patterns, you look for what's called a mean reversion pivot. That's one of many patterns I cover in the ebook that's included for my live room members that I just created last week. But anyway, when something runs up a lot, it'll often pull back to half, a 50% retracement, and then bounce. Tilray is one good candidate for that if it breaks back over 30. And I was trading this, I've been trading this since November. But anyway, I'm looking for a pivot if it bounces back over 30 and especially over 35. It's kind of like the GameStop, you know, all the mania, and it runs up and then it runs back down again. And they say, wait a minute, maybe we should get back in, and it runs back up a second time. So what I want you to look for is the second leg of moves in the cannabis instruments next week. And I'll be doing that. Growth Generations, a spectacular chart, which has not sold off nearly as much as the other cannabis ones. So that's a good relative strength play. This is kind of like the Lowe's or the hardware supplier to the entire cannabis industry, and it's Growth Generation, GRWG, the ticker. Notice visually, the pullback is not nearly as severe. I mean, it's 68 down to 52 or so, right? What's the close on that one? 56. Yeah, closed right here, 56. The low was 52. Anyway, it's good relative strength, uptrend. It's tripled in value since November, right? Going from 20 to 60. The one that's been traded highly actively on, you can see Wednesday and Thursday, 2.5 billion shares traded. That's probably a multiple of the float. But Sundial, that's one I had alerted my members to back when it was 94 cents a share. And I said it would be along over 105. And that's where I started buying at 105. I sold up at 4, I think, looking at the right near 4 on the Thursday. Anyway, the point is, this guy is a spectacular runner. In this one, in Sundial, we want to use whole numbers. So every dollar increment's significant. $1, $2, $3, $4. You take a look, you can see that's a key resistance level. $4 here, $3 here, $2 support resistance here, and $1 was the breakout trigger. That's why I started trading it over $1.05 successfully. That's one of many strategies that you'll learn about as a live room member, is using things like whole numbers, especially valuable for stocks under $20 a share as key support resistance, and more importantly, how to get in without getting shaken out by a false breakout or getting in too soon or too late. So volatility and money to be made and money to be lost if you're on the wrong side of it, certainly here in these instruments. One that's been a little more consistent is 3D. I mentioned this one to you folks several weeks ago, and congratulations to those of you who are trading it. It ran all the way from $10 a share to $56 a share. It's in pullback territory now, so we don't go long yet. But if it does take out new highs, or if it mean reverts, if it goes back down to say 30 or so, if 3D goes back down to 30 and starts to pivot, it may be a good setup. So, hey, wow, a lot of people here. Wow, big turnout. Thanks everyone for being here. You're right, Steve. Yeah, Tilray and AFA, two AFRIA, they're combining, right? One's taking over the other, merger and acquisition. Tilray and APHA will become one at some point. But yeah, I was looking at the Wall Street Bets thread on Reddit, and they're saying AFA to the moon and all. A lot of the, it's funny to see what the amateurs out there say about things. I'm sure they said that about GameStop too. It's 300, it'll double for. Don't listen to amateurs on message boards and forums. That's usually not a good. You want to listen to people who know what they're talking about, like Kramer on Mad Money, right? People that know what they're talking about are people you want to give a big booyah to, because if you want to do well in these markets, you got to trade based on fact and opinion, or you trade based on fact and data, not opinion, right? Everyone's got an opinion. And a lot of water cooler talk about things. All we care about as traders is price action and money and avoiding stop losses that are large. All we've got is our stops and our trade management. The two most important things that you'll focus on as an active trader, we go over this all the time in the live room, is ranges and risk management. Those are the two R's, along with high volume and high volatility. So range, risk management, volume, and volatility. And how to do all that's things that we don't have time to cover today, but I cover in the live room. So there's 3Ds, spectacular run up. Take a shot if it mean reverts, bounce off the 30, maybe 32, or if it takes out 58 later. That's less likely. It's probably going to drift and drop here and then bounce. Here's another quick tip. When it comes to playing pivots, don't. At least don't at your first instinct. Often you get what's called a dead cat bounce. Something will start to go down, bad kitty, whoosh, do a little bounce. You buy the bounce, and then it keeps going down against you. And if you've done that as many tens of thousands of times as I have, you learn to wait and be patient. Wait till it looks like surely they can't sell it off anymore. And wait again, and then it'll keep dropping. And then when it's at a key support level that's obvious to the crowd, you still don't want to trade that. You want to trade using very specific parameters or things that you need to learn how to play pivots for things that have run up, have come back down, and are starting to bounce. And I teach how to do that in the live room. Anyway, we'll look at a close-up of what I'm talking about with a close-up view of some of the cannabis stocks in just a second. Anyway, Zillow looks spectacular. It's only doubled, right, since November, December. So in less than 90 days, if you were a Zillow trader or investor, you would have doubled your money. Zillow, Z-I-L-L-O. They make selling homes easy. And anyway, with the pandemic out there and people fleeing the big cities for the relative safety of the suburbs, companies like Zillow, the leader, the Amazon of home real estate, doing spectacular. Nice gap up and runner. I don't see any resistance on the horizon there. The other thing you want to pay attention to is commodities. I've been calling Freeport McMoran since it was, I think, 16 a share, and now it's up at 31 a share. This is a copper miner, right? There's a lot of small and medium and large miners of different metals out there, whether it's copper, silver, or gold. Silver has been on everyone's radar lately, but the one to pay attention to is Freeport. If we can get a better price for it, would be great. We got a almost not quite a hammer, I think, because the tail, the upper shadow is a little too tall, but similar to a hammer at the 50 simple moving average line. That's one of my favorite pivot patterns for candlesticks, is seeing a reversal candle that hammers out a low and simultaneously kind of helps you connect the dots on a 50 SMA. A pivot above that makes sense, and so that ran up nicely. Who can tell me this candlestick pattern? And again, for more on candles, learn from my colleague Steve Nissen at candlecharts.com. Don't learn from anyone else other than Steve Nissen. He's the only person worth learning from in candlesticks. Everyone else makes mistakes. I see them all the time. Nissen knows his stuff. He's the number one. So, but anyway, the point is, for the fellow candlestick enthusiasts, what's that pattern? Name that pattern. Echo, play theme song Jeopardy.
I found a few matches for that. Did you mean Vietnam song?
Echo, never mind. Bom, 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 bom. Okay, what do you guys have? Hey, Chris has it, Wendy has it, Gerald has it, Heidi has it. Yeah, Mick, you got it, man. Of course, Mira's got it. You're right, Chris is saying realtors hate Zillow. Opinions are like belly buttons or other parts of one's anatomy, as everyone has one, right? From in, right? Yeah, it's a bearish engulfing. So from a trade management standpoint, that says sell it all, Mortimer, if you lose the support of the bearish engulfment candle, which this did. Now, I like to add my own secret special sauce. You may have seen my award-winning articles and technical analysis of Stocks and Commodities magazine. I'm late with my latest article, but I will get it in this weekend. I like to use things like decade values, like 30. So if I were long here, I would wait for like 29.8 to trail a stop. Does that make sense? And the technical signal would have been to sell right under 31, which is smart too. But I often find support at increments of 10, like $20, $30, $40, often act as a psychological support or resistance. So for that reason, I would wait till, if I were long this, I would sell it all if it loses 29.8 would be my professional exit. I would scale back in somewhere over 34. In the meantime, we'll leave it alone. Anyway, great chart. Let's take a kind of a close-up look at some of the high volatility charts. And if we take a look at our pot stocks, I'm still in long sundial a bit. I bought starting, I think it was 94 cents at $1.05, and it's currently right over 2.05. I'd sold 440. I've got a screen cap proof somewhere. CH. Let me show you this. If you want to be impressed, watch this. Just a second. It's screen cap P&L proof of me selling Tilray at 68 and selling this guy at 440. Let's see, where is it? Got all these charts here. Let's see, there's one. Market value is here. I'm trying to show you where I sold it. This is in my old IB account. The small account, I left a few dollars in it. By the way, this is what a successful trading yield curve looks like. Here's a little tiny, just had like 1,000, maybe 2,000, 1,000. At the time I had 1,000, now it's almost 2,400. This is what your account curve should look like if you're trading successfully, like I am in this account, right? It should be going up. It shouldn't be going down. Let's see, where is, yeah, here it is. I want to show you P&L proof. Now, I'd only bought 10 shares and I sold 8 of it, but still I made 600 bucks. And my P&L on that was healthy. So I sold 8. Here's P&L proof. I sold Tilray at 68 and I sold Sundial at 440. Now that's not the exact top, but it's pretty dang close. And if you want to get an equity curve like this in your market, in your trading account, you've got to make trades like that, like I did, right? It's always nice to see your account up 129% on the trade, right? The equity change. This is a little itty bitty account. It's like a small account challenge thing. But the point is, you want to learn from somebody like myself who actually trades and knows how to do that. So I sold Sundial at 440 before the big drop. I sold Tilray at 68. In from 8, out at 68. That's almost as good as my buying TVIX at 50 is either $54 or $56 and selling it at 940. Those are the type of trades. Now that's, swinging for the fences, but it doesn't take that many home runs to do well as a trader. I think it's important. How many of you would agree? I'm just curious. I'm one of the few people in the world that shows actual P&Ls of live real money accounts of real trades I'm doing. How many of you would agree it's kind of valuable to learn from somebody who actually has P&L proof? They know how to trade and is actually trading live accounts, not these sim overseas accounts or anything like that. I think it's helpful to learn from people who actually trade and have the wherewithal. Now, I will tell you, this illustrates one of my favorite patterns. I was in from way down here, down at $8 a share. I sold at $68 a share. Now, this is one of my favorite patterns, and that is sell the big honking gap up, right? If you have a huge gap up in your favor, look at large gaps as gifts. And if you see a bearish cut pattern or a descending triangle or other, it's going down, sell it, then sell it, right? I mean, because I fully remember this thing being at 28 bucks a share, and I said, hey, 68, I'll take it. And I didn't sell it all. I sold 80% of my shares right up there at the 68 a share. Now it's on sale for $29.67 a share, right? Learning how to do that and learning how to exit in time is one of the core skills that we teach our traders in my Trading the Open Live room, right? One of the things that I think you'll learn, at least if your experience has been like the many thousands of traders I've taught over the years, exits are more important than entries. I'm curious, how many of you disagree? And feel free to disagree with me. Allow me to retort, to quote Sam Jackson from Pulp Fiction, one of the best movies in the world. Permit me to retort, your entries are not nearly as important as your exits. Your exits gate or determine your P&L in the trade. So, you know, if I bought 8 or if I bought 10 or if I bought 20 or 30 or 40 or whatever, as long as I sold 68, doesn't matter. But if I had bought, you know, say, if I bought 68 and sold 30, that would matter, right? So your exits gauge your success and your profitability as a trader. That's one of the things I like to teach. So how many of you would agree? I'm just curious. Which, or type in, take just a second and, oh, wow, triple digit turnout. We have a lot of people here today. Thank you for being here. How many of you would agree that or type in the word, what do you think is more important, entries or exits? Newer traders who are struggling will always say entries. Any of you are market makers or professionals, or any of my institutional clients will say, well, exits, of course, right? That's the difference between you and me. That's the difference between professional trading and amateurs, or the educators out there who are pretending to trade and don't. I'm a real money trader. I know how this works. Your exits are everything. You know, if I buy 20 bucks a share and sell it 19.50 and take a small stop, and then I buy again at say 21, and then I sell at 22, I made some money. Okay, the exit counts. If I bought at 20, it goes up to 23, and then I sit on it and let it come all the way back down to my entry, which I would never do, and sell at break even, then I just sacrificed all that potential profit. Learning how to exit on time is critically important. And a big piece of that is knowing which chart patterns, advanced chart patterns, make sense to trade. One of the resources that I just developed last week for all of you, all the many traders in my live room, is a brand new, for the first time ever, released top 10 day trading chart pattern setups. And these are not simplistic amateur hour ones like bull flags or it's a gap or derp. You know, I have more professional charts. They're easy to understand because they're annotated. And I've got a 16-page PDF ebook that's yours free, included with the live room trial membership. So it's only 29 bucks to go in the room with the money back guarantee even. So you can try it absolutely risk-free. You can see many testimonials. You can see examples of winning recent alerts that we did, you know, I guess last week, the week before, whatnot, where people were alerted, how the trade worked out, and much more at the live room. So you may have seen me featured all over the place, right? I'm at Fidelity, TheStreet.com, CBS Market Watch, and you can see hot links to where I'm featured in those famous places and the logos on the front page at Trade Mastery. So anyway, back to it. Trying to scroll up here. So that's my Trading the Open Live room. We've got a few minutes left. Let's take a look now at some day trading charts, all right? Put a lot of work into this. It's my life's work and I'm proud of it. tens of thousands of traders trained. I've ran the room since the year 2000. So 20 years in business. So much longer than most people. I know my stuff. And the great thing about my room is I got so many brilliant traders there, like Wendy and Felix and John and Barry and all these other folks who routinely pick charts that are even better than the ones that I can find. So we got a teamwork effort, of really smart men and women at the Live Trading Open Room who are experienced. By the way, for what it's worth, most of my customers, most of my traders are my age and are middle-aged and older, right? They're experienced people. They're not these Robin Hood, hey, let's go buy some GameStop at 300. That's not our demographic. Most of my traders are, I'm 57. Most of my traders are around my age or even older. Some say, hey, you're just a young one, right? So my appeal is mostly towards people my age and older, for what it's worth. I got a lot of younger folks in there too, but my appeal is to people who are smart and experienced and have been battle worn and learned the difference between what works and what doesn't. And we come together as a community, as an active group to learn together. So we don't do, like a $2 stock. Hey, let's hotkey in 5,000 shares. That's for morons. That's for amateurs. We like to trade things with a little better consistency and volatility. How about that GameStop? It's finding support in the high 40s, right? It was up and down, but doesn't have much of a trend. One thing that I like to focus on when I teach traders is things that are good for both day and swing trading, right? So if we're looking for charts, we like charts that go a little something like this. This is one that Wendy had mentioned, a riot yesterday. We had a riot with it, and the day before, too, she had mentioned riot and Mara, two of the Bitcoin plays. Anyway, we like charts that have consistent uptrends on a swing trading chart, as well as the day's momentum gappers. So that way we've got a variety of charts to learn from. Now, if we take I only got a few minutes left. We're going to wrap up at the half hour, and thanks to all of you for being here. If we look at the week ahead, let's see, Tilray. I trade most of the Canadian ones. I've not been trading the Curl and some of the other domestic ones, at least not yet. The ones like Afria and Sundial and Tilray are three of my favorites. Canopy Growth is also good. But look at this. Now I sold 440 and I just showed you P&L proof. I sold there. Booyah. Ring the register. Anyway, but the point is, how do we profit potentially from the next big run? Where do we scale in? Do we scale in right now? Do we wait for 2.5? Do we wait for 3? Do we wait for 4? Let me ask you guys a quick question. We only got a couple of minutes left. If you're looking for an entry in Sundial, where would you go long? It'll probably gap come Tuesday. Remember, markets are open starting Tuesday and they're closed on Monday. And happy Valentine's Day to all of you. We got some sweet looking charts out here, and you're covering them with my strategies exclusively at my Trading the Open Live Room experience. So do be sure to join if you're not yet a member. You have my word, I worked my butt off for you guys, and it's got a money back guarantee on the trial, so you can try for a couple weeks and see if you, I think I've only had, I don't know, less than 8 people have asked for money back out of hundreds and hundreds and hundreds over the last year or so. So it's very popular. Anyway, the point is, where would you go? I only got a minute left, gang. In the next 30 seconds, where would you go long Sundial? More importantly is, where would you put a hard stop? I'd put a hard stop right under 180, say 1.7. On any pivot attempt I make in Sundial, I'll be putting a hard stop at $1.70. But where would you guys get in? Hit me up with your best shot. Hey, Steve. Hey, Andy. Hey, Howard. Hey, Heidi. Sundial 243, 320. Thanks, Fernando said, don't forget to get your wife flowers. Good idea. Thank you for that. How do I get flowers? I don't go anywhere in the pandemic, so I got to get flowers delivered to the doorstep. Thank you for the reminder. And thanks to Fernando for all of you. Get that special someone, special something. Anyway, where are we going to hit it? Kind of a trick question. It doesn't freaking matter where you go in. Did you listen? It doesn't matter if you buy 220 or 240 or 260 or 283. Who cares? What matters is, number one, where's your initial hard stop value? And number two, how do you scale in successfully, like I did? You want to scale in aggressively. There is no magic answer where to buy this. Who knows? Who cares? What matters is position sizing and risk management on the downside. Trick question there, but it doesn't, we don't know. It may go to, we may buy 220 and it may instantly drop down to $1 or something, right? We might buy 260 and it skyrockets up to 360. It doesn't matter the specific entry, even though I give you guys my specific entries where I'm trading things live in real time in the live room. But what's more important to ask yourself is how you manage risk on the back end and how you scale for the ones that work out. So if I buy, I say 500 shares at 220 and immediately goes against me, when are we going to get out? Somewhere right under 2, like $1.80, $1.70 at the lowest for a swing trade. For a day trade, I may scalp out at 20, 30 cents under the inside bid. If I scale in, maybe up at, say, 260, I might buy again over 3, say 310. The entries, oops. Our time is up, friends. Echo. Stop the madness. Like Mr. Wonderful would say, show me the money, right? Stop the madness. There's got to be a better way. You've got to learn how to flip things around. As a trader, you want to focus on definitely not now. You want to focus on learning the difference between entries and exits, specific triggers from a guy who's been doing this for a couple of decades, and more. So hopefully I'll see you guys in the live room. You guys have been fantastic. Thanks for being here. I'm sorry I don't have time to answer questions anymore in these Saturday events, but bring your questions to the chat room, right? Join the chat room and ask all the questions you want. I'm happy to answer. That's what I'm here for. So have a happy Valentine's Day. Get something special for that special someone. Have an outstanding trading week ahead, and I'll see you guys in our next broadcast, same time, same channel. This stuff is fun. I love trading, and I love teaching traders. So thanks for being here.